Dave, it's not always the case that we have stock up 19, 20 points and have the CEO who's behind it. Yes, that's right. We've got a company's stock is up more than 9% ahead of the bell, and it is Palo Alto Networks, symbol PANW. Joining us now at Post 9, it's Palo Alto's chairman and CEO, old friend, Nikesh Arora. Nikesh, first of all, congratulations. You traced out a vision yesterday, which is that not only are you going to be number one in what we can call firewall, which was somewhat older but still relevant, but cloud. How do you intend to be number one?
Well, Jim, I think we're in a once-in-a-lifetime generational shift in computing. Every company, every CIO you talk to is saying, we're going to the cloud. Either they're going to the cloud, they're talking about going to the cloud, they're working with Amazon, Google, Alibaba, Oracle, or Microsoft, moving their workloads to the cloud. Now, if you think about cybersecurity, there is no single large cybersecurity player who's actually focused on providing cloud security. You cannot make this generational computing shift happen without securing the applications going to the cloud. So we took an early point of view about 12 months ago. We acquired companies, we integrated them, we went to customers, demonstrated where the need for security is, and we're doing well so far. Fingers crossed.
All right, now, your company had been known for having a little bit slower growth than some of the bigger, also upstart players in, let's say, both cloud and cyber. You traced out a vision last night, which would indicate that you can accelerate billings versus a lot of the favorites, including Kramer fave Okta, which, I talk about constantly.
I know you love the upstarts, Jim. It's very easy to drive revenue growth without profitability. I would love to have that kind of a business. Unfortunately, my investors want cash flow and growth. So we're going to go generate $1 billion plus of free cash flow over the next 3 years, every year. On top of that, we're going to go what we call our next generation security billings and revenue, approximately 57%, which in next year would make us bigger than any of the upstarts you like, whether it's Okta, CrowdStrike, Zscaler. And FY22, it probably makes us about 80% bigger than your favorite company.
Well, just so you know, I like Okta. Zscaler, but my travel trust owns Palo Alto. So before we just say, hey, listen, I like them more. 3-year growth last night traced out well in advance, well higher than some of the analyst models, of which you also indicated you follow.
Well, I've been studying the industry, the company, the market for the last 1 year, and I read about 25 analyst reports over the last 3 months and went through every model. Very early in my life, I was an analyst, so I understand how these models work. You have to make sure you understand the growth rate, profitability, and long-term cost of capital. So I looked at every one of them and saying, what's going to make them change their models and point of view about Palo Alto Networks? In the end, I can give them all the song and dance about vision and strategy. They're going to go and try and put a number in their models to figure out what my stock's worth.
Okay. The thing that really struck me was that there were a lot of people, Nikesh, who said, your deal maker. All you're going to do is buy companies, buy companies, buy companies. There were some transitions, some managers lost. To me, what you straightened out last night was that the acquisitions are to be so that you have the ultimate, and also that there are some companies that have to deal with 212 vendors. If they bring you in, and there are some big wins against Zscaler, some very big wins against Cisco that you mentioned. I'm talking about government wins. I'm talking about retail chain wins. That this is being done because companies really should consolidate, and you're the one that they can use.
Well, if you look at the landscape, and I studied enterprise companies are amazing at building their first set of products, and then you build a distribution on the back of it. Now the question is, can you fill that distribution with better product on a constant basis? Can you go from being a one-trick pony to somebody who can go do multi-product capability in the market? And in the last 12 months, we have really pivoted hard. We generated $452 million of billings this year in our next generation security business. We're guiding to $810 million next year, which is huge, which allows us to be bigger than everybody else. So we've done a strong pivot. I believe we have to go out and get the best of breed technology for our customers, give it integrated, and make sure that they don't have to go to multiple vendors. Now, they don't want to buy things off my price list. They want it integrated because they're sick and tired of having multiple vendors in their infrastructure. I wouldn't want them. That's not making you more secure. It's increasing risk the more people you have in your infrastructure. So we're hopefully trying to answer the customer's call in providing that integrated platform. And so far, looks like it's resonating with our customers in the market.
Well, to the extent that you are still captive to the global economy, and we spent a lot of time at this desk talking about business investment, or the lack thereof, perhaps, because of the uncertainty brought on by the trade war. Is it a concern? Are you seeing any evidence that perhaps people are not making the migration as quickly to the cloud as they might otherwise, given the capital that has to be used for it? And is that a concern going forward?
I think technology is bigger than secular trends on economic investment. Do you believe companies will survive Amazon without investing in technology? Do you believe companies will survive Google or Facebook or Uber or all these companies we talked about here? I think in the next 10 years, 50% of the market cap of the world will be tech companies. Or you'll have to be a tech-enabled company. Is Uber a transportation company or a tech company? Is Airbnb a hospitality company or a tech company?
Actually, I should ask you. What do you think? I mean, I don't know if you were at SoftBank when they made the original Uber investments, but...
I wasn't there. Right. I did the Ola and Grab taxi ones. But fundamentally, if you look at it, many of the new generation companies are fundamentally technology enabled. They're kind of DNA's technology, and they do hospitality or transportation on top. So if you have to make that generational shift, every company has to invest tons and tons of money in technology. You have to make sure you have customer data. You have to be able to mine it. You have to get targeted. You can do so many tech things in the next 10 years. I don't think tech spending is going away. And if tech spending is not going away, they're going to need to be secure. So we're in a growth business.
Jack Dorsey gets hacked. Jack Dorsey. We all get hacked. My American Express was hacked. My JP Morgan was hacked. I mean, everything is hacked. What I come back to is what you said at the beginning of your call, which is it's now artificial intelligence. It's no longer just guys. How can you be smarter than the bad guys with AI?
It's kind of uneven, asymmetrical playing field. The bad guys have to be right once. You have to be right all the time. It's a very, very high bar. So the new word in our industry is called cyber resilience. If I get kicked in the guts, how quickly can I stand up and how hurt am I? So it's no longer about cybersecurity. It's about I need to make sure I architect in such a way that my business doesn't shut down, my data doesn't go away. So the key is to set up your infrastructure in a way that you don't put all the crown jewels in the same place. You put checks and balances and who can get into it, who have access to it. So there's a lot of re-architecting going on. But if you look at it, a lot of companies are collecting data. Data is the new gold, and people are going after data. You've seen that in the consumer space. You've seen that in the financial services space. So the key is to design the architecture in a way that your stuff is secure, and the key is to reduce complexity in your infrastructure.
Well, I was a great fan of your predecessor, Mark McLaughlin. You're carrying on the tradition, doing a terrific job. It's right that the stock be up. Those who sell it at 180, Nikesh, okay.
Unfortunately, I can't buy. I would have bought every share.
I struggle for word. How about stupid? There you go. Nikesh Arora, CEO of Palo Alto Networks. Thank you so much.
Thanks, Jim.